All right, and we are live. We're back here discussing our favorite fintech stocks, or one of the favorite fintech stocks. PayPal and SoFi both already reported their latest earnings report, both with different sentiment right now. Today, joining us is again Roy Crossroads. Links are down in the description for the social media. As always, welcome, Roy. It's a pleasure.
Good to be here. Thanks for having me on.
So let's start with the top sentiment questions. We've seen both earnings. We've read the earnings report. We've seen the stocks reaction. Top line thoughts, stocks reaction for PayPal and SoFi.
Yeah, neither of them did very well. PayPal's, I think, went up 1.3 something percent on earnings day, and people were like, that's terrible. It's like, well, people look at oftentimes if they're not following the company, like myself, so there's companies I kind of track, but I don't dig through the earnings reports. And if I see something sell off hard, I'll be like, hey, they must have done something wrong, or something went wrong. That's not always the case. So PayPal reported on the second weakest day for the S&P 500 in 12 months. Second weakest. So 1.39%, yeah, not great. And then yesterday, I don't really know why the sell-off was there. They had price target upgrades. Seems like across the board, and had really good earnings, but I think they might have been dragged down by Block because they're being investigated yesterday. They went down like 7.5%. And those two stocks, I don't know why, but they love to track each other. Like when there was some Worldline information where they talked about some danger to payment service providers in Europe.
Yeah.
PayPal, of course, sold off, and it makes sense, even though it was overblown. I knew it was overblown at the time. And Block, which has like no presence over there, it got dragged down. I'm like, that's dumb. So I think the reverse happened this time. And then SoFi, it dumped considerably. Usually you get a pump and then a dump.
Yep.
The numbers were really good. We'll dig into it a little bit more, but there were, I think the earnings call itself was not great, and there were some, I wouldn't say concerning things, but some reason to give some pause to people that were looking at the stock. Myself, I added a little bit to SoFi. I almost bought PayPal this morning. I think that I will. I'm about to transfer my accounts over to Robinhood here
Hmm.
after earnings this next week. So I'm like, I can just wait. But no, for both of these companies, I felt a lot more excited about PayPal's earnings versus last time I had some concerns. So, I just try to be objective. Doesn't mean I'm right.
Yeah, no, I agree. 3 months ago we had the same call. We were on the same stream, I think, with regards to PayPal. The earnings call there was very, very like lackluster to say
Yeah.
to say the least. We were talking about, yeah, okay, if we're not seeing some improvement, some excitements from management, from the product, from the results, then maybe we're wrong. But clearly, this quarter has shown that they are working quite hard and we are seeing some improvements. Plus, the earnings call was amazing, in my opinion.
Yes.
With SoFi, it was, the quarter was a pretty good quarter, as always with SoFi. The call was, yeah, yet again, it's not, I wouldn't say it's exactly the same as PayPal, because it's quite a different company, let's say, different. The market, the macro affects this company way more now, with interest rates being high, inflation, stuff like that. Everything Jerome Powell says is going to be reflected in the stock. But yeah, there was maybe a bit too much conservatism from Anthony Noto. Do you think there is a valid reason for that? Because last year also their guidance was pretty weakish, and then it's always a beat and raise, beat and raise, beat and raise.
Yeah, they know more than I do, and ultimately, I think Anthony Noto is a great CEO. Banks tend to be a little bit conservative when they don't act like that. Then you get the Silicon Valley Bank type episode, or the New
Yep.
York Community Bank. So there's a reason for them to be cautious, especially with the BTFP program ending here recently. So that makes sense. But last quarter, they mentioned that built into their guidance were assumptions of smaller than number rate cuts and GDP, or actually unemployment rather. Was it GDP? I think it was unemployment being significantly higher than it was, and both
Yeah,
those things
five
don't make
percent or
sense.
so.
Yeah, and both those things don't make sense. The economy, it's cooled down a little bit.
Hmm.
Powell threw out the stag and the inflation yesterday. That was kind of fun. But no, I think that it's fine that they're being conservative, but I think that they're a little bit too conservative. So with between new allocations that they have. They had the highest number of deposits, 3 billion. They sold some loans, and then they also did the senior convertible notes. They raised a lot of ability to be able to issue loans, and so the CFO Chris Lapointe said that they can issue over 20 billion of loans and not be anywhere near where they're within the limit of what they're able to lend out safely, according to regulation. So that's a lot of lending that they've not done, that they've left on the table. I thought, and they guided for this. So this is on me. This is not on them. But they said, hey, we're going to slow lending, and it's going to be 90 to 95%
Yep.
over this next year, meaning we're going to slow the lending platform a bit over this year, which is normally not what you want to hear when a company is growing. Of course, the other two segments are growing nicely, but I was like, no, I don't think that they'll slow it. Maybe they'll just kind of keep it the same, right around 100%, because they've raised a lot of that room. It seemed like conditions were good and optimal. And they kind of acknowledged that in the call itself, but they said, nope, we're not going to do it. And now I believe them. And so that's kind of my change in sentiment. Whereas before I'm like, hey, they've been way overly conservative. They still are as far as guidance. But if you actually take into account like that they mean exactly what they say, and they're, for whatever reason, out of an abundance of overcaution, just refusing to do lending in abundance, it's going to impact the bottom line. And so I don't see a like, I'm already loaded very heavily with SoFi. It's I'm positioned number 3 as far as size of my portfolio. So I added a little bit just to top things off where I wanted it to be. And then outside of that, I'm like, I'm just going to sit and hold for a bit. I don't see a reason to rush into this versus still adding to Tesla, although I like the lower price better. And a PayPal I'm very interested in adding to. So I'll likely do that here in the next month.
These are the top 3. I mean, probably Palantir is number 1, I guess.
Palantir is number 1, and it's not even close. Palantir is bigger than everything else in my portfolio combined, including crypto, which I normally don't throw in there. It's huge. Even with it being down a bit, and that earnings is going to smash. It's going to be so good. Very excited on that. I if I wasn't like so heavily allocated, I'd be adding here. I'm just like, 70% is enough. You got to draw the line somewhere. But we'll see. I mean, they could surprise negatively. I don't think so. Like, oh man. But yeah, number 2 is actually Robinhood. Robinhood, as far as allocation, was number 4 or 5. But
because of the jumping,
it's run a lot. It's up substantially, even though it's come back down some. It's doing pretty good today because it's tied more to crypto than it should be. But I put a price target in December of hitting $26 as a base case, and I still feel like that's very reasonable. When we were at 21 briefly, I'm like, maybe I was a little too conservative, but that's base case. Like silly things can happen, and they're all leaps. So I've been taking gains along the way. As we write up more, I'll take some more gains, about to hit that 1 year mark. And it's just a trade for me. So this is not a forever number 2 position. I will maybe in the next cycle go long on Robinhood, but right now I'm like, hey, this year is going to be really good for Robinhood. I don't know what's in the future. So I'm happy to just take some gains on that. But yeah, number 3 and number 4, usually very close to each other, is PayPal and SoFi. I think SoFi beats PayPal out by 1% or 2 right now, but it's very close. And then Tesla, I'm still building out. It's catching up, especially. I need to check that because we've risen quite a bit from when I was buying a little bit heavier. So we'll see. And then just some little positions like crypto miners, just under 1%.
Okay, interesting. Yeah, I added a little bit of Palantir today. I know some people will say just wait for the earnings, which usually I do. But then again, I've got some cash extra if something bad happens, which again, I don't see how they miss. Maybe expectations are high, so the market will find something to be worried about, but I don't really see how. And I reopened Robinhood as well for an earnings trade. But I mean, I was in Robinhood at 8, so that's 16 or something. Was pretty happy with that. So we'll see. But they've got some great momentum.
Like with Robinhood, the question is how much is priced into those earnings. Some certainly is, like, 'cause the way that they report numbers, what they're going to report from those things. That guidance and like what they did in April, my goodness, they're killing it. So that one, it should be good, but you never know. Like they could do a triple beat and then fall 10%. We've seen that. Case in point. PayPal, SoFi.
So let's start with PayPal first. What were like I know you wrote some posts on X. What were like the positives and negatives for the quarter for you?
Man, okay, so this was a case of, and it's kind of the opposite of SoFi, but sometimes when you look at those initial numbers, you hear the earnings call, you're like, really good earnings, and then you dig in and you're like, that's not so good, and that's not so good, and here's some concerns here, and I have question marks on. This was the opposite. That when PayPal reported, I was like, okay, the numbers I was pretty optimistic on, and they beat almost everything. They were a little bit more cautious on the buybacks than I thought.
Mm-hmm.
And I think there's one other number where I came underneath, but everything else, and I'm optimistic. I'm a bull. I had higher targets than all the analysts. They smashed those. They smashed their guidance. The call itself was well executed. The guidance was very clear. Alex Chris did a good job of talking about future products. And I was just like, okay, this is better than I expected. And then there's a couple of concerns, but let me get into that in just a second. So, like, the biggest surprise for me is that huge increase in free cash flow. That they generated 1.763 billion, which puts them well above the pace of expecting that 5 billion through the year. Like, they're way ahead of it. And that quarter one is not usually their strongest quarter, not at all. That's quarter four. So they're doing a lot of things right. They're being there are some restructuring charges that they have as Alex Chris shifts things around in the business. But as they're growing revenue and they're doing it, it would be double digits if it wasn't for this very strong US dollar, and a lot of the revenue comes international. But that would have been like a great headline, but they're like at 9% because of the pesky strong dollar. It affects everybody who has a US that's selling a lot overseas, and Palantir will be affected on that too, by the way. But no, they're growing well. Their active accounts actually inverted, so it had
that was
been, I
surprising.
think, a year. Yeah. So they added 1 million active accounts, and they're still churning off some of those Latin American ones that they subsidize. So I expect that trend will continue year over year. It doesn't look like that. So if you're looking at that as far as a headline, oh, year over year it went down. Well, yeah, but this is the first quarter that it actually went up in a full year. They're growing there too, and that's not even like.
Oh, I think we lost Roy. Houston, we have a problem.
It says
He
connection.
did tell me there was you're back, not back, half back.
Oh no,
half back. I can hear you a little bit. Now you're
you can
moving.
see me okay?
I can hear you better than I can see you.
Okay.
No, it's a bit better, yeah.
All right. Okay, it looks okay. Yeah, we're having storms in the area, guys, so I apologize. It's shouldn't affect the internet usually, but the power, I don't know. In case you missed it, yeah, like everything beat. Monthly active accounts went up 2%. Credit losses were even down. That's one of those little things when you're digging in. You're like, they're being cautious with business lending, and it's showing that. But like the free cash flow is really the most exciting. And then the second thing was something that's not even showing up in guidance right now is the first look product. So Alex Chris explicitly mentioned Fastlane.
Yeah.
I think 16 or 18 times. Well, no, he didn't mention all of it. Like some of it was Jamie Miller, the CFO, and analysts were asking about this as well. And the impressive thing about Fastlane is they're piloting this out as a program with some of their merchant partners. And this is for checkout conversion. So I won't go into like everything that it does. I've got a post on that today. I know you've talked about it as well. But basically, when a person comes in and puts items in the cart, they don't always check out. That rate is usually 40 to 45% successfully check out. A really good company that has it all together might have 50% checkout rate.
Mm-hmm.
Fastlane in this pilot program, when they first mentioned it, and they just were working with BigCommerce, I think, they were really excited because they're like, hey, we can get up to 70% checkout conversion if all these things happen. And they were super excited about that. Chris is saying with multiple merchant partners, again, this is just a pilot, they're seeing an 80% conversion for returning guests. So people can use guest checkout once they've signed up with FastPass, and it's very quick. All you have to do is click once, and the whole thing is done. You don't have to update your shipping address, figure out your payment method, or anything like that. And so you can imagine this from a merchant's perspective. If you come in, previously with PayPal, you come in, you're like, all right, we got the branded name, we got these different other value added services, tools, fraud prediction, really good authorization rates, really good uptime, good latency, and some of those are best in class. Not everything. You're like, yeah, that's pretty good, but why not choose Stripe? Why not choose Adyen? Why go with branded when it costs me a little bit more instead of something that's unbranded? There's sometimes reasons to do that, sometimes not. It just depends. But you come in with this. Nobody has anything like this. I mean, other people can try to emulate it, but the powerful thing for PayPal is they have the data advantage. And so they have a double sided network where they know the merchants, they know the consumers. And so they recognize a lot of people that aren't even PayPal users right away. You can sign up with Fastlane. You don't have to be a PayPal person. And then you use that. And for merchants, it means they're not going to double their revenue, but it's doubling the conversions right there for sure. And so whenever people are using this, it's going to be revenue accretive for merchants. And this is all branded. So it's very much higher margin. You're going to see branded when this is launched in the second half really begin to accelerate. And Alex Chris mentioned this has network effects. So this is just with a small number of merchants, and it's a small pilot. What happens when people are signing up on all these different vendors with Fastlane? It'll recognize you if you do it, like, let's say if Lowe's has it. I don't know that they do. You sign up with that, and then you go over to Home Depot and you're wanting to check out, and you see a one-click Fastlane button. You click on that, boom, you're done. So very exciting. The other first look products, very, very good too, but it's great to hear that update. And that was, I think, obviously what Alex Chris was most excited about. Like, his middle name should be Fastlane at this point.
Yeah, I mean, I wrote down also the 40% of unknown users opt into Fastlane for payments on guest checkout. I mean, that was pretty remarkable. Plus, I think I heard it right, that all the innovations are not really baked into guidance for this year, which, I mean, okay, to me, that's the bar being set quite low, and there's quite some upside left. But yeah, plus, oops. Plus the fact that this is just starting right now. Of course, we know that plenty of other, I mean, there's Shopify, Pretty Fast, Apple Pay, Google Pay, all of that. But PayPal has the reach. PayPal has the brand recognition. It's worldwide. Has, I mean, hundreds of millions of people that are using it. So launching new products, the adoption is going to be quite big, and that's, in my opinion, one of the huge advantages of PayPal. Yes, it's true that they're late on quite a lot of things, but I mean, like we say, better
Yes.
late than never. So
Yes. Yeah, and this is one that they're leading on, not just late. Like the biometrics, like the Apple Pay type method, those are late on, to be honest.
yeah,
But yeah, Chris is making up for last time because he is in the fast lane. Sorry.
exactly. Maybe she should be using that. Should be using that in the next earnings call. Plus,
Yeah.
he did say that he sounded more. I mean, I don't want to quote him, but he acknowledged that last time he wasn't that excited, or sounded as exciting as this week. So at least there's that. But yeah, one thing Block has, for I think we talked about that the last time, is that Block has a great ecosystem that works very well together, and I think that's what PayPal is trying to do right now as well with branded, unbranded, Venmo especially.
Oh yeah.
I mean, I think I wrote that down with $18 billion that flows into Venmo each month, but 80% of it leaves within 10 days.
Yep.
Alex wasn't really that happy about that. So there's definitely, I mean, there's definitely some work left to do with regards to that. But yeah, overall, I mean, pretty good report. Also with Zoom, stablecoin, I think it's pretty certain that they're investing now way more than ever before.
Oh yeah.
So we should be seeing some success there. The bar also with Zoom is quite low. So every
Yeah.
upside is going to be quite positive for the company.
Yeah, Nathan, by the way, hit the nail on the head with the Venmo. Like, Alex Chris talks probably more about that platform than anything else. So loves it, and it'll be interesting to see how what he rolls out and what he improves. Like, I think he's very, very good at this sort of thing. So like reading off a piece of paper, which is how the earnings call always starts, he's a little bit flat. So anything prepared, but if he's just speaking like this, it's great. One of the other things too that I absolutely loved, and I need to do a write up on this. I don't know that I'll get time today or tomorrow, but He mentioned this last quarter that they were changing the way that some of the incentives and bonuses were structured. Of
Hmm.
course, part of that is they're giving cash instead of stock-based compensation,
Yep.
which is just really good. They're actually changed the way that stock-based compensation is reported in their EPS. So that kind of shifted algorithms off a little bit. They were like initially like, "Oh, huge miss," and people were reporting. I'm like, "Dude, it was a beat." They just changed their reporting methodology, and then the algorithms caught it. And I
Yeah.
think some people still think they missed, but it's like, hey, no, they crushed EPS. But the other thing was just a comment that they said that their incentives and their bonuses are based upon that accretive margin growth. That it's amazing when a CEO says, "Hey, this is what we're trying to do as a company, and it's good for shareholders," and they also aligned their incentives for their workers based on those metrics. As that doesn't usually happen, like it should all the time. And so that's highly significant. Usually, what you put bonuses on, and you say, "Hey, you get a big bonus if this number is available from this department that you're working in." That tends to happen more often than not. People like making those bonuses, and it's actually a big part of the package that's offered for PayPal for some positions. So we're going to see some good things, I think, on margins. Very excited about that.
Yeah. Pay for performance culture is was a big one.
You know
But
it.
yeah, margins this quarter were hit, right?
Yeah, yeah,
Um,
that was a bad one. But
yeah.
did I think I mentioned the reason on that in my review,
Hmm.
and so initially my take was, "Ooh, this is a big miss on GAAP operating margins, and non-GAAP was just a 0.1% miss." So I was like, it's I was expecting it'd be flat, maybe slightly up, slightly down, um, but we're close to that point of inversion. It actually inverted in quarter four, so quarter over quarter, I wasn't expecting too much. Now, the reason why this fell so much, digging into the report, was this restructuring charge. So when Alex Chris came in, he changed the way that PayPal functions as a business internally. They hired on some new additional people for new roles, and I think it just makes a lot of sense. It's very Intuit like. We've talked about that, I think, in the past.
Yeah.
But most of that restructuring charge hits in quarter one, which is why the margins dropped, because it went specifically towards that. And then quarter two, a little bit still hits in quarter two, but most of it's taken care of. So it's a one-time event, one-time thing. It's there to streamline the business. It makes a lot of sense to me. So I'm like, okay, I don't love that it was a miss, and that was the absolute worst thing, but it's not bad since it's like, okay, it's a one-time thing. It makes sense. I just wasn't personally expecting that or thinking about that, but it's like, yeah, I'll give them a pass on that.
Yeah. No, fair enough. I also like to talk a bit about the transaction margin dollars, transaction margins. They did say that transaction margin dollars will be positive for the full year, despite, I mean, quarter over quarter, yes, we're down, but I mean, last quarter we were all surprised, right, that transaction margins were up. Now we're back down. But overall, what do you think? You think we're back on track, or you think we're still going to be some ups and downs here and there? Despite, I know transaction margin dollars overall for this year is going to be positive, but do you think it's going to be like up and to the right, or we're still going to see some small bumps each and every quarter, but overall we're going up?
Yeah, I mean, they guided for the full year for that to improve, which means it's not just going to wait until quarter four, which is actually usually the weakest as far as margins. They have some seasonal expenses that are a little bit higher. So I would expect quarter two to be good, quarter three probably to be quite good, and then quarter four maybe even better. And with all of their guidance, again, they are not baking into the equation the first look products at all. And
Hmm.
those are all revolving around branded, which is margin accretive. So uh, yeah, I think that they've already hit the inflection point. We've seen that. Quarter two, we'll see what it does. Quarter two is also the first time that we'll see the benefits of the layoffs baked in there that they did, the 7% layoffs,
Yep.
and see less of a restructuring hit. So we'll have to see. But yeah, quarter two I think will be good. Quarter three should be very good. Um,
All right. I know. I mean, I think you touched about it with regards to take rate. It's down. Take rate will come down this year, but not as much as last year. That was mentioned in the call. But yeah, I mean, the reasons that they give us here are fair reasons, in my opinion. Previously, I also love the new earnings reports.
yes.
So much more information, way more transparent. I mean, much better. I mean, for for SoFi, which we're going to talk in just a bit, I would love to see a bit more information, especially with the tech platform. But I'll touch on that in just a second. I do want to ask you about your personal experience with PayPal, the app. I saw you posting a couple of pictures on X with regards to the cashback and stuff like that. Um, of course, in the US, it's amazing how many offers you guys get from Robinhood, from your other credit cards, from other
Yeah.
programs. I'm getting my PayPal debit card next week. Yes, there are some nice little cashbacks here and there, but nothing close to the offering of the US. But yeah, if you could share your experience so far.
Yeah, I mean, so way back in the day, this is a long time ago, more than a decade ago. I had a business and primarily used PayPal as for my business. A lot of it was through eBay, not all of it. And yeah, they worked really well. So I have a business account technically. So sometimes I'll see some different things and not see some things like crypto that are usually offered. But as far as using it, like I'll use it. Probably 2 or 3 times a week, PayPal for purchases. I usually don't use the app that much. I just check out with whatever
Hmm.
using PayPal. Alex Chris, he mentioned the rewards that they were changing the way the app looked and everything. It's a lot cleaner. It's a lot easier to use. Very very simple. Seems to function well. Not a lot of latency. Like it's quick. And the old app, the reason why I didn't use it very much is partly because of that. It was clunky. So they've made some improvements there. The way that the rewards work, I didn't think that I would use it much, and I still haven't. Although today was
Hmm.
my first time logging in, um, probably in a month to be honest, because usually I just click PayPal and good enough, done.
Yeah.
Um, but yeah, with the actual phone, I was checking on the app, and I was like, okay, previous offers were all like 1% or 3% or 5% to like things that I never have heard of and never used. And the rewards are supposed to be targeted to what you're actually, where you're at,
Hmm.
what you're actually buying. And then there's some generic ones for everybody. Well, they hit me with a 4% cash back from Walmart, which you can do that. I don't have the PayPal card. I probably should think about getting that because you can do the 3% PayPal and 4% with the rewards and they stack. So that's 7% cash back on Walmart purchases is like that's really freaking good.
Yeah.
Priceline, another one. I may be taking a quick trip this weekend, college related, just to get my son,
Hmm.
and we'll have to book that last minute, which is never fun as far as prices, but it
Yeah.
is what it is. And I'm like, hey, Priceline has like a 5% cash back here. It's like that's crazy. Like that's really, really good. So I look through another number of offers. I'm like, okay, I like that one. I like that one. You just click, you save it. You can check out through using that. You can't. I don't think you can use it in person. I've not tried that, but it's a much better experience. And I went from somebody that even as an investor, someone that's bullish, I was like, yeah, rewards, whatever, to like, okay, I got to actually look into this and start using it a little more often because I like cashback, especially when it's 5, 7%, 8%. If I'm using the PayPal card and the Priceline thing.
Yeah.
So I got to rethink that.
Mm. Yeah, no, I mean, it does seem like they want to incentivize people, users, to use the app more, to use the ecosystem more. Do you have Venmo as well?
I do, yeah. I don't use Venmo often, maybe like once or twice a month. We actually had a garage sale, a community wide one, like 2 weeks
Hmm.
ago, and nobody. I thought, I would be like, hey, let's use Venmo, let's do Venmo. People wanted to freaking use Zelle, and I'm like, I
Yeah.
hate Zelle. I hate it so much. This house that we're in right here, I almost lost this house because Zelle was clunky, didn't work well, had some weird issues. It was the most frustrating payment experience I've used in my life. So yeah, I ended up using Zelle twice or 3 times, and I was like, why? I hate this product, and it's slow. It takes forever. My goodness, like somebody sends the money, and maybe it's just me, but they send it to me, and it takes like 10 minutes before there's actual confirmation, and I'm like, there has to be a better way. Guess what? Venmo. It's a verb. It's like near instantaneous. Never had a problem using it, but yeah, I'll use Venmo whenever there's a chance. I think the product is really good. I also like Cash App too. I think that they're for myself, my own experience, they're about equal. But
Hmm.
Zelle is trash, and I hate it. And I wish it would go die in a fire somewhere and never exist anymore.
Yeah, I mean, it's strange that people. I've watched some garage sale videos as well. I think we spoke about that in the past, and I hear people say you have Zelle, you have Zelle. I mean, I thought everybody would be asking for Cash App or Venmo, but for some reason, Zelle is also one of the favorite options.
I don't get
I
it.
don't know.
It's terrible. Like it's clunky. It takes a while to load up and it takes 10 minutes to actually. So they're sitting there like holding whatever. And I sold one very large ticket item and the guy was just sweating because on his end it showed the confirmation. I'm like, that's
Hmm.
great, but I'm going to wait until this actually hits the account before I let you go because it's $500. Like
Yeah,
$5, whatever, just go. $500 is like, no, that's enough for you to wait a few
yeah,
minutes. So, or just use Venmo. Like, come on.
yeah. What's the reason they don't use Venmo actually? Because that might be
I
a good,
don't
good
know.
feedback
Well,
for
so
for PayPal.
I'm really not sure. I should have asked that. We also had a house cleaner come by a month or two ago, and I asked. So I was like, "Hey, do you use PayPal or Venmo?" And she's like, just Zelle." I'm like, "Why? What are you doing?" So I I don't know. Like my own other people, some for some reason love Zelle. Like have people not used Venmo or Cash App? Like even Cash App. I'm not in that company. I'm not pushing it. I'm not pumping it,
Mm,
but it's like it's way better than Zelle. So it frustrates me.
yeah.
But sometimes people get. I don't know why. Maybe it's just offered through their bank, so they don't have to sign up for something extra. That might be the reason. Because I did see some people just using that like within their bank account,
Hmm.
but it doesn't make any sense to me.
Yeah.
Maybe that's why SoFi is being so slow in their Zelle integration. They're like, "Hey, Roy has a point. Zelle is garbage. Venmo is where it's at."
Yeah,
Maybe.
could be. I mean, later today we have a Block's earnings report.
Yeah.
Should be interesting. I wonder if they'll touch on the report that came out yesterday. I hope so, but
They need to. And
yeah.
Jack's, I'm not the biggest fan of Jack Dorsey, but he's been doing better as a CEO. So I'm not a shareholder, not interested, not going to get in there. So hopefully he continues that for you guys that are shareholders. It's also nice as a PayPal shareholder because the stocks love to run together. So if Block dumps again, PayPal will, it'll lose a couple of percent just because it's like, oh, Jack Dorsey messed up, better sell PayPal. I don't get it, but hey,
Yeah.
algos.
Yeah, I mean, I think it's a pretty easy beat for them right now because
Yeah,
of
it
the
is.
year-over-year comparisons, all the changes that they're making. So I think it's pretty easy. Let's see if the guide changes, but yeah, I don't know. I'm still very. I still have it, but maybe later tonight, depending on what I hear or see, might sell and add to the SoFis and PayPal's, maybe probably also Palantir. But yeah, we'll see. Um, One last thing on the Venmo PayPal thing. It is still strange to me that these are two apps that are separate and there is no real I mean, there is a connection, but
A little bit.
yeah, I still don't get it. It's
Yeah.
crazy.
I think in August it was announced that or maybe it was September, that Venmo and PayPal could like communicate with each other. You could send from one to the other because of the stable coin.
Hmm.
And it's like, okay, Venmo was bought like how many years ago? Like, what are you guys doing? So Alex Chris brings a new rate of innovation and improvement. And he came in as an outsider saying, instead of Schulman, where he's like, hey, best in class everything, guys. Ignore the noise, like ignore the stock, ignore our revenues, ignore our margins. We're the best. And Alex Chris comes in and he's like, hey, there's some great stuff here, but we got to go back to our core, really focus on what we are and who we are as a PayPal business. And we're not best in class in everything. There's a lot of room for improvement. In fact, they mentioned that with Zoom. And I know you mentioned it just a second ago where they were looking at that, thinking like maybe we should divest from this because it's underachieved, it's underperformed. And then they're like, hey, we've got this stable coin. Let's take a look. And they're able to change some things so offer the 0% fees on
Yep.
sending money. There is, they still do make money off of it just because of the not interchange, but the difference between what the currency actually trades for versus the dollar. But yeah, they're able to do that very low margin because of an internal product they developed that was launched back in August. So it's like, great, they can actually make money with it. But they're very serious about not just growing that top line revenue and the number of users. They want to grow margins while they grow revenue. And they did that. They've been doing that consistently. I know it fell just slightly if you look at non-GAAP margins here,
Yep.
but they're guiding for the full year. I believe them. and they're being very conservative, I think, with the guidance. So I'm excited to add more here and resume adding likely next month. So
Yeah, fair enough. I think the stablecoin, of course, they start with the Zoom one part of the business, but I think if they see success in that, I think they should integrate it in the whole PayPal ecosystem. Would
that's the
save
plan.
a ton of money, would be great for margins as well. So why not? Plus,
Yeah,
it's extremely fast.
there's a couple guys that work on that. I don't think exclusively, but it's a big part of what they do in the PayPal ecosystem. And they have like 30 followers. Like nobody knows about these guys. I follow them and I have like the alerts on because they don't
Mhm.
post often. But when they do, I'm like, okay, I'm paying attention. I'm looking, and that is the plan. Like, is to roll out this over the entire ecosystem. Chris doesn't talk about it too much, but that seems like what they're doing, product to product is they're bringing that. And you're right, they need to further integrate Zoom, not Zoom, Venmo and PayPal to really make that feel like one ecosystem. You can have two apps, whatever, that's fine. But it's still clunky, to be honest. There's room for improvement. Chris knows that. They're working on that, and I've seen improvements. So as long as they keep, and I need to actually go back. Like I did this for quarter 3, where Alex Chris promised these things, and every single one of those promises were met in quarter 4, which was not the best earnings call. Good earnings, but bad earnings call. I from what I recall of quarter 4, I need to go back and check every single thing that he promised. They delivered on for quarter 1. So I'm like, this guy keeps his promises. I love it, and he's very clear.
Yeah, might not always shock the world, but so far,
Yeah,
so good.
yeah.
Um, yeah. Okay, I want to switch to SoFi a little bit. So I wrote this down just for a major overview. Just made another video earlier today. So their revenue guide raised. They assume, like we said, a drop year over year in lending, but 20% growth year over year for the tech platform. Still expecting over 2.3 million new members in 2024. Q2 guide was light. Then SoFi's total capital ratio improved from 15.3% to 17.3% quarter over quarter. Overall, I mean, the quarter was pretty good, like we said.
It's good. Yeah.
If you look at the numbers, it goes up and to the right. Yes, we've seen some drops here quarter over quarter, but usually Q1 that's a bit what happens there. But what what caught your eye, good and bad, let's say, in the
I
report?
mean,
Then we'll talk about the
yeah,
call a
I mean,
bit.
there's a lot of good. Is a triple beat again. They raised full year guidance, so very very good. Members, those continue to grow. They set a baseline of 400,000, and then it was now 500,000, and then he mentioned I think 2.4, 2.5 million as a guide for this year, which puts it at over 600,000 then per quarter as a new benchmark, and that's without that NBA partnership. That's without the golfer dude, Wyndham,
Yeah.
and some others that they recently did. And they did that at the same time. So lots of marketing and everything. And I'm seeing some of that. I'm getting some of that in the mail. I get some of that in emails and stuff. I'm a SoFi member now, Relay and banking now. I recently did that. But they ended up that their marketing costs actually fell
Yes.
despite doing all that. It's like, you guys, like whoever's in the marketing department, good job. Like they're amazing, and they're not just relying on Taylor Swift. Like it's great when they're able to do that quarter 3 for a blowout quarter. I think quarter 2 or quarter 3 this year, there's a good chance that they see 1 million user growth in a quarter. Maybe not both, but I think quarter 1 might actually be the weakest quarter growth, and it was still phenomenal. So anytime that you add members too, somebody had mentioned, I think it was Amit, that the Robinhood platform gained more than 3 billion in a single quarter just on one product as far as assets under custody, and PayPal gained 3 billion. It was a record for them in an entire quarter. The difference is when you're a bank, you tend to leave money there. Quarter 1 is usually seasonally a little bit weaker for deposits for banks, and usually these things run together with other banks. Most banks like Discover were down a good bit, and yet SoFi was up. And direct deposits, they keep coming. They keep coming in. It's very reliable versus like one-time offers, which again, we're both Robinhood investors. They're doing a great job, but it's you can't think of the money that's there and locked up for 5 years in that retirement account
Yeah.
the same way as direct deposits, which you can lend against. You can do a lot of things as a bank. It's not the same at all. So that 3 billion number got me very, very excited. It gives them a lot of room to lend out, and a couple other things were good too. Um, what about you? Like anything strike your fancy in particular with the good from SoFi? Because there's a lot of good.
Yeah, I mean the like you said, they added more members than I expected. Plus, they spent less, so the customer acquisition cost dropped, which again I was very surprised. So
Yes.
that's great. They did talk a little bit about the credit card business, that they're going to invest in it quite aggressively. It's a higher return on equity product. Yes, there is going to be an investment period, so yeah, you will lose money on that in the short term, but then they call it's a J curve. So quite exciting with regards to that. I mean, overall, it's if we don't look at the stock's reaction, you would think, oh, it must have gone back to $10 or so, right?
Yeah.
But then if you look at the stock, you're like, oh, what am I even doing here? But
Yes.
but yeah, it's quite crazy that the stock has not moved much for a long time. I mean, every time I talked with the friends, like, oh, so far, yeah, it's $7. Like, what do you mean $7? Last time we talked was also $7. Like, yeah, I don't control the market. What do you want me to do?
Yeah.
But as long as the business is growing and now in a profitable way as well, that's the most important part for me. Yes, there is going to be some weakness in lending. Yes, they are very conservative right now. I think maybe a bit too much,
Yes.
maybe a bit too much. But then again, it's banking. They don't really like to take that much risk. We still know what happened last year. Some definitely know what happened back in '08. So I can understand, but they're definitely now in a position of strength compared to, let's say, a year or two ago, which, okay, we'll see what happens. I think second half of the year we're going to see rate cuts, um, unless something crazy happens. But then probably the economy would not be really in a good place.
Yeah. You mentioned the credit cards. That was something that I thought was interesting because on one hand they're saying, and I know credit cards are a little bit different than a traditional like loan that they're
Hmm.
talking about for their main lending but credit cards have been a sore spot. They have lost, I believe it's $100 million over the
Yes.
last year on that
Hmm.
platform. Which, like, if they just didn't exist, SoFi's numbers would look so good, man.
Hmm.
SoFi is very good at launching products and over time making them from in the initial launch where it's just bleeding money to improving and then actually becoming profitable. And I think that we'll see that with credit cards. I don't see any reason why it wouldn't be that way because I mean it's a very profitable and lucrative sector. It sounds like though from Notice comments that on one hand, they're going to be very cautious with lending, and on the other that they're going to go ahead and launch credit cards more aggressively among SoFi existing members that they already have a good handle of as far as their credit scores through
Yeah.
Relay. They know their spending patterns because of their bank savings. They know how they're investing. Does that sound accurate? That that's like a relatively near project, do you think, or is
I
that like
think
years off?
No, I mean, from what I read, because I couldn't really hear everything on the call, but from what I read, I do think that it's going to be not the biggest focus, but certainly a big focus for 2024. Now,
Yeah,
how they execute that plan remains to be seen, but it's definitely a bigger focus this year than last year. That's for sure.
yeah,
I
yeah.
do.
So I,
Go
I'm
ahead.
I was going to say that I agree with you. Like that, the reason why I think part of the reason why it sold off, even though I don't think it should have, like they were really good earnings. Quarter two guidance was soft, but they also raised guidance for the full year, so that should have probably offset. I don't know, but just their conservatism towards their lending platform, and then on the tech platform, we mentioned it before, but they're not very transparent. Some companies, when they have people going through this pipeline, I've seen this with Innovix, which I invested in very briefly. It doubled, and I'm like, thank you very much. See you later. But they have this long pipeline, long sell cycle, and what they'll do is they'll not be able to say the name of the company, and they've alluded to it a little bit here, but they'll say, okay, customer A, customer B, customer C, and they'll kind of show where they are in the pipeline and the expected duration of that pipeline.
Yeah.
And so you'll have a good idea of like, okay, are they just in this initial pilot phase where they're competing with like 30 other people, or are they like near the end of that where they're actually like competing maybe head to head with one or two others? That's the way a lot of these contracts work, and they won't win all of these, but they will win some. I think Galileo is actually a very, very good platform technicist as well, but we have no idea. And it sounds like the from reading between the lines with what they said as far as a tech platform, that revenue from this actually accelerating is going to be a bit further off than I anticipated. I think that's, again, me maybe reading too much into previous
Hmm.
comments, but it's like, hey, we may not see any of this additional revenue growth maybe till quarter 4, maybe till next year, and there's no guarantees even then. And I know it grew 20% quarter over quarter, but what we're doing is comparing a very, very weak quarter last year to this year. And so it's a bit like Palantir's number of 70% US commercial
Yeah.
growth year over year. When you compare like your weakest quarter in a long time in a segment to the next, it's accurate, but it's maybe not as exciting as if like next quarter, if they report 20% growth, I'll be like, hey, very good. I'm happy with that. Wish it was even faster, but I'll take 20% any day of the week. Um, it's hard to know what to expect with that because they're not very clear. The market likes certainty. I like certainty, and we didn't get it.
Yeah, no, I agree. It's exactly what I said in today's video. It's a shame because everything else is pretty good with SoFi. Just this side of the business, we rarely get more info. I mean, we always get the same words, the same sentences, but nothing extra.
Yeah.
Um, I mean, there's still no news on that top 5 US bank. Nothing really material on. I mean, we don't even know the names of any of the users other than the ones you can find on Google, but they should be mentioning those, I think,
I
more.
I think that they probably, with their larger clients, they never will never get that. It's a bit like when Palantir was used back, a couple of years ago before it has a much better reputation. It actually makes sense to mention them, where people would use them but never mention that they were using Foundry at all. And it's not for the same reason. I think that if a large bank mentions and says, "Hey, we do what we're doing back end through SoFi," people might think, "Well, why don't I just go directly to the source?" So I think that they probably won't do that. Plus, it gives competitors some inside knowledge that they wouldn't necessarily want to give. But we'll see that show up. Like if and when they land these things, tech platform is not going to grow like 17% or 20% quarter over quarter. We're going to see the number of people on the platform ramp significantly, and it's not going to be over a single quarter. These old dinosaur legacy banks, they take a little while to onboard, but it'll come in as a massive, massive wave. We haven't seen that yet. So it's uncertainty and there's no guarantees. So the market's like, you know what? We're going to price you as a bank then. And that's almost where we're at. Tangible book value of this is just over 4 billion. Um, Poor banks in not great times usually trade on a 1-to-1 ratio.
Hmm.
Market cap is like 7.5 billion right now, so we're over that a bit. But usually it's forward looking as well. So they
Yeah.
grew tangible book, I think, by 600 million. If they keep growing at that rate, I mean, we're going to get to this point where it's like, okay, it literally is trading like a very, very poor bank in hard economic times. Um, right now, I'm just holding with what I have. I bought a little more, like I mentioned. But if we get down to that stupid ratio where it's like a 1-to-1 TBV, you know, 2 quarters out, be like, all right, I'll double my SoFi position. I mean, why not? There's no risk
Yeah.
there.
Yeah, no, I
You,
agree. I mean, the premium that it gets, it's probably also because it's growing much faster than a traditional bank. So I guess they
yes.
deserve to get that premium. Plus, I mean, if we go back to the comments made uh, 3 months ago, they talk about the revenue growth from 2023 to 2026. So it's still quite some time, but not too bad, right? Not too bad for this tiny company, tiny bank, if you want to call it. Plus, even beyond 2026, they said here they see 20% to 25% EPS growth beyond that. So yeah, I mean, not that many banks can show these types of figures. So I guess the premium is warranted here.
Yeah, it is. I mean, but maybe we'll see that taken away. And if so, I won't get mad. I'll get excited because I can add a lot more SoFi. And at that point, you're getting the tech platform. You're getting basically everything except for the bank absolutely free, and even the bank would be underpriced at that point. It just okay. I've done that before with companies where you buy something and you get the rest free. It's kind of like
Yep.
with Tesla. Like a lot of times it's price. It's there's a premium there now for the full self driving for sure. But
Hmm.
there were times when you could buy Tesla just as an EV business and you get everything else free. Uh, Maybe it'll work out, maybe it won't. But if it's free, like why not?
Yeah, I mean, I think we said the same. Plenty of people said the same with Amazon back under $100. Get the
Yeah,
business plus AWS for free, and
yeah,
now more
Mm,
than doubled. So
I
yeah,
love that.
yeah, tremendous
I like
business.
free things.
Exactly. Um, what went wrong? Do you think? I mean, we talked a little bit about that, but any specifics during the call that you said, should have been better? Should have maybe
Um,
communicated better?
Yeah, everything that they could control, they largely didn't control very well. So their own guidance, they lowered it mostly for quarter two. They didn't have to do that. I don't see a reason to do that. They've deliberately chosen to not grow the lending platform, which is a reason. And I don't see why they're being so cautious on that. I just don't. Like I wish that they would. And they went back to the assuming the 7 to 8% default rate, which is pre-COVID standard. They're significantly lower than that, and I believe, correct me if wrong, that they actually improved on that. Uh, and so analysts asked, like, I think there's 3 different analysts that went back and like, dude, why are you assuming 7 to 8? Nobody's assuming that right now, and they're like, well, we're gonna. So there. Uh,
Yeah,
Anthony Noto was asked if there was going to be more offerings like the senior convertible note. They have a little bit more debt for 2026, I believe, that they could do that with. And he gave a very non-transparent answer, a non-answer. That's not great. I don't like that. They mentioned transition year a number of times. Transition year usually is lingo given to Wall Street when you plan to not make any money as a business or any growth, rather.
yeah.
That's not what SoFi is doing, except with the lending platform for whatever reason. They don't have to do
Hmm.
that. That's what they're doing. Fine. Um, and so just don't use that word. Like you can say transformational year, anything else, like honestly, but so it seems like everything that they could control, choices that they could make, tanked what otherwise were a very good set of numbers, a very good earnings. And it's very PayPal-esque, like last quarter, where the actual earnings call and what was said was not great, even though the numbers were very good. And so, that happens from time to time where there's this disconnect. Um, I don't know, unlike Alex Chris with PayPal, where you could see that he clearly listens to shareholders. He even referred to that as far as the tone, because I mentioned
Yeah.
that, to him. Other people did too. I'm not saying he just listens to me. But with Noto, I know he listens to shareholders. I know he
Hmm.
interacts with them, but they are obdurate. And I think that they say, this is our plan. And unless macro conditions change significantly, this is what we're going to do. I wish they were a little bit more clear about when and how that might be done. They aren't. So it's tough.
Yeah, I mean, I pulled this up with regards to the macro uncertainty and the lending. So these were the exact comments. So they said, yeah, I would say our outlook for the lending business is more reflective of uncertainty as opposed to whether or not there are great trends. Taking a conservative stance gives us the most optionality to do more, but not necessarily to have to do less.
Yeah.
So, I mean, this is like keeping the door half shut rather than half open. But yeah, it's interesting. It's interesting because they are in a good place. They could be doing more,
Oh, yeah.
and it wouldn't really affect them that much. So yeah, unless there's something they're not telling us, which again their track record is pretty good. So I'm not saying that we have to doubt them, but there's definitely some question marks that hopefully, I mean, 3 months from now we'll have to wait, but we'll get some answers. Or maybe in between they're going to have some talks, come on the Jim Cramer's show or whatever. But yeah, it's crazy how the exact opposite happens. PayPal, SoFi, they basically flipped, but
They
the
did.
stock doesn't really move much. But so at least that there is that.
Yeah. Yeah. And my sentiment towards each flipped as well. I thought that it would, um, just with Alex Chris being who he was. I'm like, this is not going to stay the same. The dude is hungry. And Anthony Noto is a great CEO, but he tends to be more of this is a course we're setting. we're going to stay the course. And it could be 3 months from now. Like if the economy is falling apart, unemployment's rising, inflation is out of control, stagflation really is happening. We'll be very, very thankful that
Hmm.
Anthony and Bill and Tube are making the decisions they are. I just don't think that's likely. I think it's very unlikely. I could be wrong. I'm not a great macro guy. I'm glad that he is in charge of making the shots, not me. I continue to invest in SoFi and actually allocate it a little bit more, but I just don't see a reason to be overly optimistic for the next quarter or two, other than member growth and deposits. Those will be great. They just won't lend based on that. So like we'll see.
Yeah. Plus, yeah, I mean, short interest on this is pretty high, so
Yeah.
definitely has an effect on the stock. But yeah, right now it's negative. In the future, it's probably going to be a positive because eventually they'll have to cover. So there's that. Is Robinhood competing for SoFi? I believe correct me if I'm wrong, but a long time ago, I believe Robinhood was using or maybe still using Galileo.
They are, yeah. One of their services does use Galileo. It's not like their
Hmm.
main service or
Yeah,
anything.
no, yeah,
Where they compete, Robinhood actually destroys SoFi, but there will never be a bank. Like just the way that U.S. Government is structured, it's
hmm,
very difficult to offer crypto and offer banking services. So SoFi divested completely from their
yeah.
crypto platform. Robinhood is like, yay, crypto, but we're never going to be a bank.
Hmm.
It makes it also a little bit easier for Robinhood to expand overseas than SoFi. It still can be done with SoFi. They also offer the Invest platform. That's the main platform for Robinhood. SoFi's Invest platform's okay. Um, it's not amazing. There's some things on there like level one options, which they're being very slow on.
Yeah.
Interface is okay. Like there's nothing on there where I'm like, this is significantly better. I want this here. But it's nice that they have it as an offer. It right now is a drag on profits. The Invest platform is phenomenal on Robinhood, and I'll be making that my main platform here after earnings season. So they have that 1% everything match. I'm like, hey, why not? And then credit cards. SoFi's credit card, I think, is actually for consumers, not right now for the business, but for consumers, very good offer. I think PayPal's card is actually very good as well. Robinhood's though, for consumers, there's nothing better out there. I mean, maybe like American Express Black Card or something.
Yeah.
That's out of my, I don't have multiple millions to be able to, make that a serious thing. But the Gold Card is really good. I want one, and I'll be getting one. So, but
Yeah, I'm
it's
jealous.
there's risk with that. Not in the short term, but in the long term, if they don't manage those risk rates
Hmm.
very well, I think that they might, and I think maybe the credit card will like be neutral as far as revenue, and they'll be able to grow users. That's good enough as far as Robinhood. SoFi, they're like, hey, why should we take the risk? We've already struggled with this. They're just going to be selling to the members. I think it'll be very better for the business than Robinhood's is for their business. But as a consumer, like, man, that Robinhood card, give me that.
Yeah, no, I agree. I mean, we don't have any Robin Hood here, not even close. I mean, we have Revolut, which okay, as a
Yeah.
digital thing, it's fine. But to be honest, it offers literally nothing. It's fast. Yes, I can send money here and there. Less fees, probably very close to zero fees if you pay in different currencies. So that's fine. But there's no 1% getting. I mean, 1% here, 3% there, cashback, stuff like that, retirement account, nothing. So yeah, pretty jealous on that. So yeah, that's I guess they compete, but not on everything.
Yeah. Yeah, and they won't. Like I don't think if Robinhood launched any other products that were what SoFi tries to do, I don't think that they'd be nearly as good as SoFi. I think if these companies had managed to combine into one company like
Yeah,
2 years ago, they would be the fintech giant that everybody would be talking about. They'd eat everybody else's lunch. They're so powerful. They're good. Robinhood's good at things that SoFi is not good at, and vice versa. They would be an unstoppable powerhouse, but that's not the reality we live in. Alternative reality, alternative history. You can think about that, dream about that. It's never going to happen, but it'd
yeah.
be fun to
Plus,
invest in that company, man.
yeah, but I mean that would mean that Robinhood might not offer crypto.
Yeah, yeah. They might have had to divest from that. Maybe I don't
Yeah,
know.
yeah. Do you have an exit plan for SoFi? I get asked this question not just on SoFi, but on plenty of other
Yeah,
stocks. It's like we buy do we know when we sell? Me personally, no. I have no exit plan for SoFi unless the thesis changes and management, I mean, screws up. To me, there's no plan to sell. If it were a trade, then yes, like I did with Robinhood, for example, I was very clear this is a trading position, and that's about it. I'm sure you or plenty of others do this with options as well. So there you have probably a clear
Yeah.
exit plan. But yeah, if you have.
Yeah, I'm both in stocks long term, not planning to get rid of those, 5, 7, 10 years. Or if the thesis breaks and they're like, hey, tech platform 0% growth, it's like, all right, it's broken. I will exit at that point, or exit a good chunk. Like, it'd still be a good bank, but the thesis would be over. I don't think that's going to happen. And then yeah, I do leaps. So I have plans with those as far as like where to exit, and I'm already. Uh, I think I already took gains on that back when
Mhm.
SoFi was higher up. So I've already made money on SoFi, like to the point where if everything that I held on SoFi right now went to zero, I'd still be up. So I like being in that position. It's nice. It's
Yeah,
free.
it's a luxury position, that's for sure.
Yeah. So and I'll add like as things go down, like I mentioned, if we go down to near tangible book value, I'll add a lot. But a little bit up, a little bit down, I'll just hold for right now.
Yeah. What would make these stocks move, do you think, on the up and on the downside?
Biggest thing for SoFi, even though it shouldn't be because they're a very diverse platform, is the rates. The company is not as rate sensitive as the stock indicates,
Hmm.
but any mention of rates, being higher for longer, it's tough on that stock. Any mention of rates being cut, and Powell, even just saying that there wouldn't be a hike, like the stock pumped during
Yeah,
that and during
yesterday
the
was
pullback.
crazy.
Uh, Quantitative, I don't know, like easing quantitative tightening, not going to quantitative easing. I think that's a little bit helpful there. If there's a little bit more certainty on the rates, that'll help. And the biggest thing is like in future earnings, like if the tech platform, well, I guess a couple of things. If we start seeing real significant growth in the tech platform, that's 20% or above next quarter, not this week quarter. That's very exciting. Membership growth of hitting that 1 million mark in a quarter, which I think they will do in the next 2 quarters, that should lead to a bit of a pump. I can see student lending coming back in strength, not so much quarter 2. And I work at a university. I know how students think. I know
Hmm.
these are like former students or whatever, but quarter 3 is when we're going to begin to see that, I think, ramp. In quarter 4, especially so. That may add to a bit of a pump as well. Um, and any of these events, because it's so highly shorted, it's going to be very, very volatile. For PayPal, I think just it's not going to be like a fast mover, like double, overnight or anything like that. I think we should be over 70, and stock can do anything like that it's going to do. But in a week, it wouldn't be shocking me that we're looking at $70 range, and we're just kind of range bound between 70 and 85 for until the next quarter, depending on what the macro does. But macro continues to improve. People are spending. Spending is healthy, and every single one thing about PayPal, except for just one or two little quibbles, is going very, very well. So if the narrative is PayPal is a dying dinosaur, it's not differentiated, it has a lot of competition, but it's not true. And as First Look products, as PayUSD, as some of their other products end up continuing to roll out, and they see like if they hit next time real double-digit revenue growth for the first time in a bit, not just FX neutral, but actual 10%, which they could, that narrative has to change. It just has to. It can't stay the same. People like making money, and people are like, oh, the big guys are all against it. Not PayPal. It's not heavily shorted at all, just because people recognize on that one, it's tough to move that stock down much. They are just printing cash, um, doing a lot of buybacks, not quite as much as I was hoping that they would do this
Yeah.
quarter. That was one little quibble, but no. So I think PayPal just takes time and execution, which they're doing, and SoFi is more dependent on them changing their mind as far as the way that they lend or on rates being cut.
Yeah. No, I think I agree. I think with PayPal, myself included, I we were expecting 2 billion, I think, overall in buybacks. We got 1.5, which okay, is
Yeah.
better than before. Is better than before. Plus, free
Yes.
cash flow came in much higher than what I thought, which is great if they can continue like that. And I mean, if the stock doesn't, If the stock doesn't move much, then it's just more shares that are being retired, which of course for long-term investors, whenever things will go up faster, you're definitely going to gain from that quite significantly. But yeah, I've had one comment on PayPal today on my channel asking again, what's the main thing with PayPal? Why is it so popular? Why is it so strong? Or isn't there like every other day a new fintech company that comes out? And I'm like, it might be, but no, very few companies have the reach, the security, the brand recognition that PayPal offers. And I think a lot of people also don't know that a lot of payments happen on Braintree, which you don't see. Just like Stripe, just like Adyen, you don't see that. Doesn't mean they're not making money on payments you make on a specific website. But I think, I mean, we're talking about SoFi, we're talking about PayPal a lot here on X. It's yes, two companies in the fintech industry, but one company, which is PayPal, is in a much healthier place because of the size and I mean the sheer profitability of this business. So I put this one a bit higher than SoFi because SoFi, although it's growing super fast, we're nowhere near the profitability levels of a PayPal. Could maybe happen in the future, but until then, we're still quite small compared to the giant that is PayPal.
Yeah, and PayPal, it went up a little bit. It's gone up a little bit. That price to free cash flow number, especially if so
Continue.
they had a one-time thing that added like 100 million, so it's like 1.8
Mhm.
billion free cash flow. I really think of it as 1.7 something, 1.736. That was with the drag of a few different things, and without the benefit of the layoffs. So if they continue to grow revenue, with the restructuring being less of a drag, a couple other items quarter over quarter that were a drag, and the layoffs, they could be looking at $2 billion free cash flow next quarter or thereabouts. Not long ago, they weren't doing anywhere near that. The free cash flow, like, you guys can do the math. If they're doing $2 billion free cash flow per quarter, this company is still stupidly undervalued. In fact, it's cheaper now than when it was trading at like $53 or whatever, based on that metric. Like, and that's my favorite metric for a company this stage. You can't do that for SoFi because they've not had free cash flow that long.
Mhm.
And actually it's a bank too. So you really like don't touch that with banks, but it's my favorite metric, price to free cash flow for most things. Really gives you a good idea of what's happening there. And boy, that number, that's why that was the number one number for me that I was so excited about, because it wasn't just based on a one time, hey, we sold all these loans or we divested from part of our business.
Yeah.
And so it really pumped it. It's like, no, this is real. It's happening. It's accelerating. And everything is indicating the direction they're going in. So I'm like, man, I've got enough SoFi right now. I don't have enough PayPal. I need to add more.
Yeah, I mean, right now, this is just in the last 12 months metric, which is already a quite good one. It's 14 times price to free cash flow. So if we do that in the
Yeah.
forward one, it's lower. So yeah, it's a pretty good one. It's a pretty good metric to see. And you just said something. You don't have enough. You have enough SoFi, not enough PayPal. Remember, we talked about that 3 months ago, that we were not willing to add more PayPal until we see results. Yes, the
Yep.
stock might have gone up 10-15% or so since then, but that's fine, since right now we're getting way more indication. We get the confidence that the business is actually doing much better.
Oh,
So
yeah.
yes, okay, we missed on 15%. We actually didn't miss because we already have a position,
Yeah.
but right now we feel more comfortable adding to our existing position because the numbers look just much better, which is also something long-term investors should definitely know and adapt to their strategy.
Yeah, for sure. And like, just because a stock moves up or down doesn't mean it got more expensive or cheaper. You have to look at the actual numbers that they're putting out. So Tesla, despite moving down, and I know it's back up now,
Mm,
it did not get cheaper based on the
no.
numbers.
Mm,
This is a stock that doesn't trade on numbers. It's based on narrative and hype and what they're doing in the future. And I think there's a reason for that move. I know we're not talking to Tesla here, but conversely with PayPal, it's like it's sitting in this range, but they are printing cash. They are buying back their stock, and everything is pointing to acceleration on every single good metric across the board. Uh, it's like, man, and there's so much they're not even baking in the guidance. It's stupidly undervalued, and it went from like same price, but it's like it got a lot cheaper with that print, a lot cheaper. Ooh,
Yeah, I agree. I mean, people still think PayPal is a shit go, but uh,
hey, more for me.
yeah, exactly, exactly.
No,
I mean,
I mean, honestly, like if the stock wants to sit here, and I'll just be buying shares at this point. I've got enough leaps. I've been burned there. My stocks are up pretty good. I'm happy if it just sits here for a freaking year. Like it'd be stupid if they keep doing this, but if they do, we're gonna get to the point where it's a no brainer just to add easy money. Like there's a reason why it's not shorted at all. Like there's such little short interest
I
on it.
think 2% or not even or something like that.
Yeah,
Yeah.
that's basically like it rounds to zero. Like because other short sellers are not idiots. They look at SoFi, and I do think SoFi is undervalued. There are some concerns there, and they just recognize sector weakness. PayPal they look at and they're like, it's sold off a lot, yes, but like they have inverted all these different things. They have a great new CEO. They're growing well. They're printing money. They're buying back shares rapidly. That's very
Mm.
risky to short here. If it's trading at double, like 120, 130, it's like, yeah, maybe then, but like it's not. It's
Yeah. And I mean, even double, if the business continues the way it's doing right now, it wouldn't even be expensive. It would
no.
just be less cheap.
It would be, well, it depends on how much they're growing. It would probably be close to fair value if it doubles from here. So I'd have to take another look. I've not done that with the quarter two numbers there, but
Hmm.
yeah, over 100 is not like crazy. Like, will it go back to the COVID high this year? Probably not. If it
No.
does, I would be sold out long before then, even if they're reporting ridiculous things. It just,
Yeah, no.
yeah,
In the next 6 to 8 months, if it happens, then we're back in 2020. Then I probably cash out. That's for sure.
yeah. Oh, yeah.
Um, yeah. All right. Before we end, maybe a quick expectations on Palantir on Monday. Yeah, I mean, our expectations are quite high, but yeah, for the last segment here, if you'd like to touch on your expectations for the coming results.
Yeah, I've not typed that up yet. I need to look, as far as actual numbers. I did predictions last time. This has been like a crazy busy 2 weeks for me.
Hmm.
So like if I get anything out, I'm doing good. But no, they guided for 40% US commercial growth for the full year guidance.
Yep.
They did 70, but it was against a weaker quarter in
Week.
quarter
Yeah.
four. We're seeing number of clients accelerate. In quarter four, we saw US commercial accelerate. We saw revenue accelerate. Margins actually improved. I don't know how they keep doing
Hmm.
it, but they keep doing that. Probably the only negative thing that I would guess in the Palantir earnings would be maybe some international weakness, just because it's
Yeah.
been that way. Although we've seen some new partnerships there, so not sure. And we might also see. Lost my train of thought. Oh yeah, more stock based compensation, just because they're hiring, they're needing to ramp. But yeah, they're going from 500 something boot camps last year, and a number of pilots outside of that. To the goal is 2,000. They're a little bit slower pace than the goal of 2,000 so far this year, but they'll get close. These cause new people to onboard with Palantir. We saw a lot of big names do that as well, like in
Yep.
all sorts of sectors. Hospitals are up to 20% utilage as far as PayPal empowering their beds, and that's a space that has an immense TAM. We see hospitals just like taking one little Palantir use case and then saying, "Well, how else can we use this? Because this is incredible." And we're seeing that also in like retail. That's one of their slower sectors. We see the Lowe's partnership, the Kohl's partnership, Walgreens Boot Alliance as well. Of course, they landed the big Titan contract, which I don't think that we'll see the full revenue. It depends how it comes
Hmm.
in quarter one, but we will for quarter two. So even government's looking pretty solid. So they're going to smash. It'll be a triple beat. The stock can do anything, but we see what it's done the last few times. I'm not saying make short term bets. I am not. I'm not going to do that. I'm just saying, like, if you want some Palantir, you might want to be like the couch investor and add a little here. It's your money. Do with what you want. And it could be that the stock price pumps, but it actually gets cheaper because of how they're performing. I think that they're going to destroy that full year guidance, and it's not even to come close. Like this is one of those companies. Karp mentioned this in a video yesterday, and he said, somebody asked like where do they see Palantir like 10 to 20 years from now,
Yeah.
and he mentioned it growing uh, in 10 years, 10 to 20 times,
X. Yeah.
which I don't think he had market cap necessarily in mind. Maybe he
Nah,
did, but
but the
like if he
company,
did, like yeah, that's okay. I'm good with those numbers.
yeah, I'm good with 10, I'm good with 15.
Man,
uh,
I,
yeah,
I would take the under on those numbers, but no, I'm a long term shareholder, and there's a reason why this is a huge part of my portfolio, and that might increase not because I allocate, just because of what Palantir does. My goodness. Hmm.
yeah, no, I agree. I think we're going to see a huge reacceleration of revenue, and with their margin becoming better. Again, I don't know how, but the margin becoming better means the profitability becomes better as well. Even if SBC is a bit higher, I think the percent of revenue as a percentage of revenue, it's still going to be lower than before. So that's fine. I mean, I'm happy for them to invest in the business. If it grows the sales force, that means they're doing something very, very well. So that's
Yeah,
fine. Government side of the business, in my opinion, is still underrated. I think we're going to see a reacceleration that this year. Palantir, Anduril. I mean, if I could invest in Anduril, I would definitely do that. But I mean, they're showing that there's definitely some money to be made in those sector as a smaller big software player. And I think more money will flow into those types of companies moving forward. If you can be good defensively, offensively, and spend less money and get best in class products, why not? Why
yeah.
not? I mean,
It and Palantir uniquely is one of those companies that hire for longer is fantastic. It might slow adoption with some things. I don't think so, though. I'm not seeing that. They have 4 billion in cash and no debt, so they just print money off of that. Like, okay, short-term treasuries, yes,
yeah. Plus the buybacks. I'm not even mad at them not buying back shares because they're making
it's
more money with the cash. So why would they buy back shares? Just
yeah,
doesn't make sense.
yep,
Um, yeah. Okay. If anyone has some last words here, um, write it down in the comments below. If not, yeah, it's earnings season is quite interesting so far. So good, right? Overall for the companies reporting, other than Starbucks, I would say.
yeah.
um,
Oh, that
Starbucks, yeah,
interview. Did you see the
yeah,
Jim Cramer interview?
yeah. Wow.
You gotta love. I mean, I always have liked Jim Cramer. Honestly, like I think he's entertaining.
Hmm.
Investment advice, maybe not, but I respect him even more after that. Like calling out a guy and saying no.
Yeah, man, that interview, I had to watch it twice. I was like, first it popped up on my feed, and I was like, who's that? Because I completely forgot that that's the CEO of Starbucks. But
Same.
then, oh, horrible, painful, very painful.
Yeah.
But yeah, so far, big tech software companies are performing quite well. Let's see tonight, big one, Apple. Apple, we have
Mhm.
Coinbase. I think they'll do fine. Block, I think they'll do fine as well. But yeah, remains to be seen. And next week is yeah, Palantir, Robinhood. I think Celsius as well. For
Yep.
those that are following that. But yeah, interesting. The more information we get on how these companies perform, the better it will be to see also how the consumer is doing, the economy. Gives us some good indications. So yeah, as always, thank you very much for coming on. Always a pleasure. Um, and I'll link your socials down in the description below. Thank you all for tuning in, and I'll see you in the next one.